US dollar at risk of sudden collapse. Ex-IMF official warns blow-up event could sink currency as debt mounts, with the United States expected to double down on its fiscal stimulus measures to mitigate the economic fallout from the coronavirus pandemic, and the US Federal Reserve continuing its aggressive monetary policy easing. There's a rising risk of a sudden loss of confidence in the US dollar, according to a former senior executive with the International Monetary Fund, Zhu Min, who was deputy managing director of the IMF from 2011 to 2016, said the US dollar's position as the dominant global currency was at risk of being eroded because of the mounting US government debt. The US Congress is considering a fresh round of relief to support the US economy that is likely to cost at least $1 trillion on top of more than $2 trillion passed earlier this year. Leaders of the Democratic-led House of Representatives and Republican-led Senate will have to reach a compromise on separate bills, with the House having already passed a $3 trillion package, while the Senate is expected to pass a smaller bill of about $1 trillion in the coming days. The concern isn't whether the US dollar will see an accumulated decline of 30% in the future, but whether there will be a blow-up event that causes a sudden loss of confidence in the US dollar and its market to collapse, said Zhu, who is currently head of the National Financial Research Institute at Tsinghua University in Beijing. Stephen Englander, global head of G10 Currency Research and North America Macro Strategy at Standard Chartered Bank New York, said the slide in the US dollar's share of global reserves in the past 2 decades represent the combination of a lower US dollar share in China's reserves and the selling of US dollars by reserve managers. The ability to exploit its reserve currency status for political purposes is reflected in the US use of the global financial system to sanction opponents. This began in the Clinton era 1993 to 2001 and expanded under subsequent administrations. The threat of such sanctions probably conflicts with the US dollar's public role as a reserve currency, Englander said. The US dollar looks worse as a reserve currency when financial markets are tranquil, Englander said. When the liquidity is no longer required, unneeded US dollar balances will be put back into the market, and the US dollar will likely fall. A sell-off against a basket of major currencies has continued since March, and on Thursday, the US dollar hit its lowest level since September 2018. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.